Ever wondered how the interest rate on your mortgage could impact your monthly payments and overall financial well-being? It's a crucial question for anyone looking to buy a home or refinance their existing mortgage. And when you're exploring your options, one name that often comes up is LoanDepot. So, the big question we're tackling today is, does LoanDepot offer both fixed-rate and adjustable-rate mortgages? Buying a home is likely the biggest financial decision most of us will ever make. Securing the right mortgage is paramount, and understanding the different types of mortgages available is the first critical step. Among the most common types are fixed-rate mortgages and adjustable-rate mortgages, often referred to as ARMs. These two differ significantly in how their interest rates are structured, which in turn affects your monthly payments and the total amount of interest you'll pay over the life of the loan. A fixed-rate mortgage is exactly what it sounds like. The interest rate remains the same for the entire term of the loan, which is typically 15, 20, or 30 years. This predictability offers stability and makes budgeting easier, as your principal and interest payments will stay consistent. On the other hand, an adjustable-rate mortgage has an interest rate that is fixed for an initial period, after which it adjusts periodically based on market conditions. This initial fixed period can range from a few years, e.g., 5 to 1 ARM, where the rate is fixed for the first 5 years, to longer durations, e.g., 10 to 1 ARM, where the rate is fixed for the first 10 years. After this initial period, the interest rate will adjust at predetermined intervals, e.g., annually in a 5 to 1 ARM or a 10 to 1 ARM. The choice between a fixed rate and an adjustable rate mortgage depends on various factors, including your financial situation, risk tolerance, how long you plan to stay in the home, and your expectations about future interest rate movements. Fixed-rate mortgages are often preferred by those who value stability and want to know exactly what their monthly payments will be for the entire loan term. They can offer peace of mind, especially in times of rising interest rates. However, the initial interest rate on a fixed-rate mortgage might be slightly higher than the initial rate on an ARM. Adjustable-rate mortgages, on the other hand, can be attractive for borrowers who plan to move or refinance before the adjustment period begins, or for those who believe interest rates will fall in the future. The initial lower interest rate on an ARM can result in lower monthly payments during the fixed-rate period, freeing up cash flow for other expenses or investments. However, there's also the risk that interest rates could rise significantly after the fixed period ends, leading to higher monthly payments that might become unaffordable. Now, let's bring LoanDepot into the picture. As a major non-bank lender in the United States, LoanDepot offers a wide range of mortgage products to cater to different borrower needs. To definitively answer whether they offer both fixed-rate and adjustable-rate mortgages, we need to delve into their offerings. Based on available information, LoanDepot does indeed provide both fixed-rate and adjustable-rate mortgages. This is a common practice for most large mortgage lenders as it allows them to serve a broader spectrum of borrowers with varying financial goals and risk appetites. When it comes to fixed-rate mortgages at LoanDepot, you can typically find options with various loan terms, such as 15-year, 20-year, and 30-year fixed-rate mortgages. The 30-year fixed-rate mortgage is a popular choice due to its typically lower monthly payments, although it results in paying more interest over the life of the loan compared to shorter-term options. The 15-year and 20-year fixed-rate mortgages offer the benefit of a shorter repayment period and lower total interest paid, but they come with higher monthly payments. LoanDepot would typically offer these standard fixed-rate products, aligning with the offerings of most major lenders. Regarding adjustable-rate mortgages, LoanDepot also provides these types of loans. Common ARM options include 5-1 ARMs, 7-1 ARMs, and sometimes even 10-1 ARMs. The first number indicates the number of years the initial interest rate is fixed, and the second number indicates how often the interest rate adjusts after the initial period, in this case, every year. For example, with a 5-to-1 ARM, the interest rate remains fixed for the first 5 years, and then it adjusts annually for the remainder of the loan term. It's important to understand the mechanics of how ARMs adjust. Typically, The interest rate is tied to a specific index, such as the Secured Overnight Financing Rate, SOFR, or the Constant Maturity Treasury, CMT Index, plus the margin. The margin is a fixed number of percentage points that the lender adds to the index to determine the adjustable interest rate. Most ARMs also have rate caps in place to limit how much the interest rate can increase at each adjustment period and over the life of the loan. These caps can provide some protection against significant interest rate spikes. For instance, a 5-to-1 ARM might have a cap of 2/2/5, meaning the interest rate can increase by no more than 2% at the first adjustment, no more than 2% at each subsequent adjustment, and no more than 5% over the initial rate during the entire loan term. When considering an ARM from LoanDepot or any other lender, it's crucial to carefully review the loan terms, including the initial fixed interest rate, the index it's tied to, the margin, the adjustment frequency, and the rate caps. Understanding these details will help you assess the potential risks and benefits of an ARM compared to a fixed-rate mortgage. Keep in mind that interest rates for both fixed-rate and adjustable-rate mortgages can fluctuate based on broader economic factors, such as the Federal Reserve's monetary policy, inflation, and the overall health of the economy. Therefore, the rates you see quoted today might be different tomorrow. It's crucial to stay informed about market trends and to compare offers from multiple lenders, including LoanDepot, to ensure you're getting the most favorable terms. In conclusion, based on general knowledge of mortgage lenders and the typical offerings of large non-bank institutions like LoanDepot, it is highly likely that LoanDepot does offer both fixed-rate and adjustable-rate mortgages as part of their suite of home loan products. They aim to cater to a diverse range of borrowers with different needs and preferences regarding interest rate stability and initial affordability. To get the most accurate and up-to-date information on LoanDepot's current mortgage offerings, including the specific types of fixed-rate and adjustable-rate mortgages they provide and their current interest rates and terms, the best course of action is to visit their official website or contact one of their loan officers directly. They will be able to provide you with detailed information tailored to your specific situation and the prevailing market conditions. Remember to ask about the initial fixed period for ARMs, the adjustment index and margin, and any rate caps that may apply. Understanding these details is crucial for making an informed decision about which type of mortgage is right for you. With that said, thanks for watching, and until next time.